BMO ETFs have partnered with investors for over a decade.
Hello, welcome to Strictly Money. I'm Saijal Patel. They say health is wealth. Being physically and mentally able to work and make a living is something most of us take for granted. But the reality is we can get sick, we can get into an accident, and we can be mentally incapacitated, all of which can prevent us from sustaining a living. This is where critical illness insurance and disability insurance can provide a financial security blanket if done right. Chad Larmond is an insurance advisor and runs his own company, Larmond Risk Management Insurance. And he joins me now with his take on how you can protect your earnings through the right type of insurance. Chad, it's great to have you on the show.
Thanks for having me, Saijal. Good to see you.
I feel that most of us, especially those who are young, still take for granted that we'll always be healthy and may not really need to consider things like critical insurance. And yet, you know, I see these stats. 2.5 million Canadians have heart disease. 1 in 2 Canadians will get cancer. The odds are kind of stacked against us. So we can't really ignore some type of income replacement solution, can we?
No, I think it's important to consider what happens and crash test your financial plan. Make sure that the defensive part of your strategy is well thought through, solid, and there if you need it. And critical illness insurance can definitely be a part of that equation.
So can you explain what critical insurance is and how it works for our viewers?
Sure. Excuse me. Critical illness insurance pays a one-time lump sum tax-free benefit if you're diagnosed with one of the covered conditions in the contract. The policy pays for a diagnosis of the top 3 covered conditions in a contract would be cancer, heart attack, stroke. There's a list of 20 plus other conditions that are covered as well.
Mm-hmm. Okay, so let's run through, Chad. Let's run through some of the hesitancies that people have when they're thinking about critical insurance. One is that the premiums aren't worth it, especially in Canada where we have a public healthcare system. What do you say to that?
Yeah, for sure. I think the biggest reasons people want to buy and own critical illness insurance is to take financial stress out of your life. You know, if there was the unfortunate circumstance of a diagnosis, and you know, that's the biggest thing. There's other reasons to have it. You know, if you wanted to get quicker treatment in the US, you could use the funds to pay for treatment and expedite that treatment for yourself. We do have a great Canadian healthcare system, that's for sure. Mm-hmm. Yeah, so those are the reasons I see people, you know, considering critical illness insurance as part of their plan, and helping to, you know, insulate their retirement savings or create cash, you know, when a difficult circumstance, you know, happens, you know, not just to the person diagnosed, but maybe the entire family unit.
Yeah. And what I've realized is it gives you some flexibility. When you get a lump sum, there's a lot of things that you don't think about, right? Like you may have to refurbish your home. You may want to take a vacation just because of the stress. You may need to hire extra help. So this kind of gives that kind of flexibility, does it not?
Yeah, I think financial flexibility is key. I think the ability to go back to work on your own terms, to take a pause, and, you know, really focus on your health and getting better. The statistics show us that, yes, people are going to be diagnosed, but most likely we're going to survive, which is really why the product was created in the first place, as really a complement to maybe your term life insurance or overall life insurance portfolio.
Okay. What about this notion that it's a scam and that insurance providers won't pay the claim? I hear this a lot.
Yeah, so I guess it's an important thing to note that in the Canadian marketplace, there's different ways to pick up or purchase insurance. And my best advice is that you work through a life insurance licensed advisor in the Canadian marketplace. I believe that specialization is key. And you want to be providing, when you're applying for coverage, as much information about your health history to the insurance company up front before a contract is entered into between yourself and that insurance company. And, you know, a good advisor can help you negotiate and navigate the marketplace. And in my experience, 20 years now, which is crazy to say, I've seen many claims, and the only claims that haven't been paid is just where they they weren't meeting the definition within the contract because, maybe the diagnosis was such an early stage that it wasn't covered, or it paid out like an early assistance benefit. But legitimate claims are paid and paid on a regular basis.
All right. We're going to continue this conversation after this break. Chad, before the break, we were talking about some of the misconceptions around critical insurance. One of the things that I also see is I don't need extra insurance because I'm covered through work. How do you know that it's enough? And what are some of the things you need to think about?
Yeah, so that's a great question, Saijal. I think the group benefits marketplace, and when someone has a group benefits plan, is a great starting point. But you do want to kind of dig in and figure out exactly how much coverage you have. And like we talked about previously, it's important that overarching aspect of control. Any private coverage that you structure, you'll be in control of, the customization, the amount. If you left your employer for another employer or went self-employed, private plans are going to follow you wherever you go. Or typically a group plan, you'll be leaving that behind and then having to kind of relook at, new group coverage in the future. From an amount perspective, with critical illness insurance specifically, a starting point for us when we talk to clients is looking at replacing 1 year's worth of your earnings. Obviously, more is going to be better than less, but you want to factor in, budgetary considerations. And, the more I reflect and look at my practice and clients buying critical illness insurance, you can buy it with return of premium where you get all your money back. But probably what's more important is just covering off maybe even the next 10 or 20 years so that if the unfortunate event happens, especially for young families while they're building their wealth, having that coverage at an affordable rate for that period of time while they raise their family, for example, might not be a bad strategy.
So, Chad, is there an ideal time that someone should think about critical insurance? Like, is 25 too young? Is it better to look at it when you're, say, 40?
Yeah, so great question. I actually bought my policy when I was 26 years of age, and I bought way more than I needed, probably because I'm in the insurance business and I had some kind of foresight and perspective on things. Now that I'm older than that and have a young family, the coverage amount that I purchased really feels just about right. But insurance, just remember, it does get more costly or expensive to buy every year that we age. So when you lock in coverage at, say, 25 or as young as you are today, whatever age that might be, you're going to generally minimize the cost of that insurance because you're locking in your two things, your good health, hopefully. If you're applying, you got to have your good health to apply, and your youngest possible age.
Okay, so let's switch gears and talk about disability insurance, which is a little bit different, right? It kicks in when you have a temporary disability that can affect you receiving a paycheck or generate business. And it's typically a work-related accident. It could be stress. It could be depression. Give us your thoughts on disability and how someone should go about getting one.
Yeah, so disability has been around longer than critical illness insurance, and it really is kind of formation on that financial planning pyramid. Disability income replacement and life insurance would be those fundamental pieces. And what disability insurance does is it pays generally a non-taxable monthly benefit when you have an injury or sickness that prevents you from doing the important duties of your job. And like you mentioned, it could be anything from an unfortunate accident or injury to a mental health claim. Sometimes there's aspects of both. It really, anything that you would ask me, is this covered? It's all related back to the definition of disability. So does the situation you're going through, injury or sickness, prevent you from doing the important duties of your job? If the answer is yes, that's when the insurance company would be on risk to pay. And there's some other nuances to it, but again, go through that with your advisor and figure out the best plan.
And how much of it you need? Is it similar to critical insurance? If you're looking at about a year's worth, or?
No, so the way disability insurance works is it's based on your earnings. So whatever amount of money you're earning on an annual basis, the insurance companies will give you a maximum amount of non-taxable monthly benefit. And they have what's called an issue and participation limits chart that we can reference. So if you're making X amount of money per year, the maximum amount of disability insurance you can buy will be Y. And the theory there is the insurance company doesn't want you to be overinsured and better off while you're collecting disability payments versus while you're working.
All right. We have about 20 seconds left. Just one final point. Critical insurance and disability insurance, they should be supplementary. It's not a matter of necessarily one or the other.
Yeah, I think, when you're looking at these coverages, it's better to have both. Like I own both products. If you had to choose one, you really probably want to focus on getting sound disability insurance coverage in place with proper definitions.
Okay.
And then look as critical illness insurance as a supplement. But, everybody's situation is different. And again, go through it with a licensed advisor and get some good advice.
All right. Chad Larmond, thanks for joining us.
BMO ETFs have partnered with investors for over a decade.
Welcome back to Strictly Money. Most parents appreciate the importance of teaching their kids about money because they know, as hard as it is for them to save and plan for a secure retirement, it will be even harder for younger generations. But knowing what to teach their kids, well, that's easier said than done. That's why I'm pleased to have Taub as my next guest. She's a professional speaker and the author of the book, The Wisest Investment, and she's here to share her tips for making your child financially capable. Hi, Robin. Great to have you on the show.
Thanks for having me.
I have to say, I've wanted to cover this topic for a long time because I run financial education programs for women and also employees. And the one comment that I hear constantly is, I wish my parents had taught me about money. Why is it so hard? Why are there so many challenges in doing this?
I hear that comment a lot too when I tell people what I do. And there's a number of challenges that parents face. One is feeling like they don't have the knowledge to teach their kids. They're just not good at this themselves, and they find it awkward and they're embarrassed. And another issue is that people feel like they don't have the time or the opportunities to teach their kids about money. They're running busy households, they're working. It's just difficult. They feel like it might be difficult to find the time to have these conversations.
Yeah. And what do you tell them? Learn together? I mean, that's often what I suggest, that there's an opportunity to do this together.
Exactly. And I mean, that's the idea behind the book, is to, it is a way for parents and children to learn together. And parents don't feel like you have to be perfect or a professional in the financial area to do this. There are some very basic things that everybody needs to learn about money. And I call those the 5 pillars. So earn, save, spend, share, and invest. And the trick is just to make sure the information that you share with your kids is age appropriate. So that deals with the knowledge piece.
Yeah. Robin, how much does this perception that talking about money is impolite, that we shouldn't do it, how much does that play a role in kids not being taught?
It does play a big role because there's still this notion that talking about money is taboo or crass. And for that reason, I think some parents just shy away from it. The other reasons we've just talked about, they're not doing a great job. Or even on the other end, if the family has a lot of money, there's a lot of awkwardness around that too. When do we share that information? How do we make sure our kids aren't spoiled or entitled? So, I think it's just one of those conversations that can be awkward for parents. And so they just tend to avoid it.
Yeah. Values, right? I always feel like, it really does come down to values, and money is just a manifestation of those values. How does a parent start by being a good role model when it comes to that?
Yeah, those are actually 2 strategies that I raise in my book that are related. So one way that parents can teach their kids about money is by being good financial role model themselves. And because our kids are aware of both the good and the bad behavior around the house when it comes to money and everything really. But so I try to encourage parents to get their own financial house in order so that they can lead by example.
Right.
And one of the pieces of that would be to be really clear about what your values are. And by that, we mean the things that are most important to you in life, that you hold dear and that you're willing to take a stand for. So when you're clear about your values, they can act as an invisible framework to help guide and prioritize financial decisions. And you can make your kids aware of your values as a family and get them to discover what their values are too. And then they can connect those to some of their goals, because goals that are connected to your values are so much more meaningful and compelling.
Yeah, absolutely. How young should parents start? And walk us through some of the conversations or even just one or two teachable lessons that they can instill.
Sure. So as soon as your kid expresses some kind of an interest or curiosity around money, that's your cue that they're ready to learn. And if they haven't, I would say by around age 5 is a good time to start. That's when most kids are starting to attend preschool and they're around other kids and they see what other kids have and do, and they may start asking questions.
We have about 30 seconds before the break, Robin. Do you suggest that parents open a bank account very early?
Well, I think the best thing to start with young kids is, and I'll show you this multi-slotted piggy bank that I have. So it's really tangible. And with young kids, you're going to start with cash. But once they become around 12, they're preteens, then they can open a youth account. And yes, I do think that's an important first step or milestone, because it teaches your kids about why it's important to have your money safely in a bank, and that they pay you interest on your savings.
All right. We're going to take a quick break and we'll continue this conversation. We'll be right back. Welcome back. My guest is Robin Taub. Robin, before the break, we were talking about age-appropriate education. So what can parents teach preteens? Those are those between the age of 9 and 12, because presumably this is the time that they might get money from small jobs. What do you think?
Yes, that's a big thing at that age. They're starting to do odd jobs like babysitting, and they're going to be earning a little bit of money, and they'll have the experience of what it takes to earn money and how much effort it is, really. And they're starting to become more independent too. So they're out with their friends and they're spending. So just making that connection between, how difficult it is to earn money and how easy it is to spend. And also they'll think a lot harder about spending their own money than they will if they're spending yours.
What do you think about allowances? It's a controversial topic.
Yes, the controversy is really around whether you pay your kids to do chores. That's what I hear from parents. And I think there's good arguments on either side. So on the one hand, some families want the chores to be done out of a sense of family responsibility, while others really want their kids to earn their allowance. Regardless of where you fall on those two sides, I think kids need the opportunity to manage money. As I said earlier, the 5 pillars: first, you need to earn it, and then you can make these choices. And they're fairly, money's finite. So once you decide to spend, there isn't anything left to save or donate or invest.
Yeah.
So giving kids that opportunity is really the point of an allowance, but you can do a hybrid where you're giving them a basic allowance and then maybe some extra money if they're going above and beyond their family chores.
What about teenagers? Because this is where they do get part-time jobs. And I find what's really interesting at this age is they're a lot more influenced heavily, by social media.
Yeah.
There's a lot more peer pressure to spend on cool things. So how do parents manage that?
That's really true. I mean, now they're going from an odd job to a real job with a boss, and they're getting a paycheck. So I think one of the best teachable moments at that stage is going over their paycheck and making sure they understand that there may be some deductions taken off for CPP or EI, probably not tax, depending on how much they make, but just making sure they understand that stuff. And if deductions are taken and they're entitled to a refund, then they have to file a tax return, which is another teachable moment. So you're right. They are feeling a lot of peer pressure, which is now even magnified by social media and social commerce, the ability to go online and see what other people have and do, and then make purchases right in the app. So I think talking to your kids about the difference between needs and wants is so critical. The needs being the must-haves for survival and the wants being the nice-to-haves. And again, money being a finite resource. What are your values? Are you spending in line with your values? And I think when they're working again, they understand what it takes to earn. So that helps. It helps them think about, well, how many hours of work do I have to put in to be able to afford such and such?
Do you think cash, Robin, sorry to interrupt. Do you think cash is still king? Especially in an age where we're going cashless?
Yeah, I think it is with young kids. As I mentioned earlier, it's a great way to start teaching them because it's tangible and concrete. But no, I mean, we are moving towards a more cashless society, and that was accelerated by the pandemic. So the way we need to teach our kids has changed. They're going to be using way more digital forms of money. They probably already are. A lot of parents are now paying their kids' allowances, not in cash, but with an app. I mean, older kids. So they need to harness that technology and leverage it, like the mobile banking app on their phones, to help them control their finances. And you can set alerts and create and track your spending and create budgets. There's lots of ways to make this type of digital spending empower you.
Yeah. We only have about 20 seconds left, Robin. One thing that parents can do to empower their children to make sure they're following through, because that's the harder part.
Yeah, because habits are like well-traveled pathways. They create grooves in the mind that rarely disappear completely. So just try to start early. Try to teach your kids when they're young so that they can learn these 5 pillars of money and then build on them as they get older.
All right. Thank you for joining us today. And before we let you go, where can someone find your book? Because I know we covered sort of high-level topics and lessons, but you have a lot more resources in your book.
I do. So if you go to thewisestinvestment.com, you'll find links to purchase, and you'll also find a free financial role model self-assessment.
All right.
So if you're curious to know how you're doing, you can take a self-assessment there.
Okay. Thanks for joining us.
Thank you for having me.
That was Robin Taub. That wraps up this edition of Strictly Money. Thanks for watching.